Welcome back to the program. This is Business Morning live on Channels Television. While the international oil benchmark, Brent crude, extended gains during the last trading session to 2-month high, as shrinking oil inventories pointed to an increasingly tight global market. The upturn in oil prices follows the U.S. sanctions on Iranian crude exports and the growth forecast on the U.S. crude oil production in 2019, which is seen dragging and prompting supply concerns. Now, Brent, against which Nigeria's oil is priced, stood at $79.64 per barrel on Wednesday. That's the last trading session. The Organization of Petroleum Exporting Countries, in its monthly oil market report for September specifically, also notes that crude oil production from Nigeria rose 1.71 million barrels per day in August from 1.53 million barrels per day to the month that we are. So total OPEC crude oil production right now averages 32.56 million barrels per day. That's for August, representing an increase of 278,000 barrels per day over the previous month. We've got Adim Okwesa from Financial Derivatives now to analyze all of this commodity side of things for us this morning. Welcome.
Thank you very much.
Thanks for making it down. Specifically, let's look at the burning economic issues. I know that oil is actually a major part of it. But from your perspectives, what's new? What are these key issues for us?
Yes, Brent oil crossed $80 per barrel yesterday before retreating to $79.35 per barrel. I think oil right now is being driven by geopolitics. The UN prospect of U.S. sanctions on Iran is really inducing fears of a supply shock. I think all those sanctions are due to come in effect in November. Right, we're already seeing buyers, usual buyers, reducing that.
It doesn't look like the U.S. is going to taper that.
I don't think so. President Trump is sticking to his hardline stance, and it doesn't look like he's going to waver. And the U.S. has set an ultimatum: you either do business with Iran or do business with the U.S. And that's a no-brainer. There's no rational investor that would rather invest in Iran than invest in the U.S. So prospective buyers are already cutting down their imports from Iran, and that is inducing fears of a supply shock, and that is why oil is going up. However, on the flip side of the coin, we are still seeing concerns of weak demand growth emerging. OPEC is trying to counteract that decline in Iran's exports by increasing production, but investors are saying that wouldn't be enough. On the other side, we are seeing concerns of weak demand growth, especially in emerging markets. We have these looming trade sanctions. The U.S. is likely to impose another $200 billion worth of sanctions on Chinese products, and that would spark concerns of weak global economic growth, and that is really a concern. And apart from that, we also have emerging market weaknesses, a stronger dollar. So that is why oil is a bit softer this morning. But I believe in the next month or so, oil should really cross that $80 per barrel mark, and maybe even closer to $85 per barrel mark, and that is really good for Nigeria. Our benchmark is $51 per barrel, so there's significant headroom for us significant wiggle room for us.
So we're now doing 1.7 million barrels per day. How do they get to that?
Yes, we're doing 1.79 barrels per day. Those force majeures that we saw in Q2 have been resolved. So those pipeline constraints have been fixed. So we believe by October, our oil production should reach 1.8 billion per barrels per day. If you combine that with higher oil prices, that would mean physical external reserves level, that would support our external reserves level, support our Naira. So we're in a very comfortable place regarding with the oil price and production.
That can only happen if we discount political tensions, if we don't have the return of the militants, going back to to damage these whole pipelines that we used to have, or issues like that. If we discount that, then we will be able to have all of this, right?
Of course, that is a big risk. Let's not forget that that was the major reason why oil production really declined in 2016, and that was what drove the recession in 2016. So if our production is sabotaged again, that would likely take us on the precipice of a recession. So let's not hope for that. I believe the government is consulting with those stakeholders, and I believe they will do everything they can to avert that threat. The second point on our burning economic issues list, August inflation numbers are due to be released tomorrow. We, FDC, we expect a marginal decline in inflation to 11.15% from 11.14%.
That's really marginal.
Very marginal decline. I think this increase should not come as a surprise.
Why?
The pace of disinflation has been declining from the past few months. So if indeed it bottoms out, I think it should be expected that this would happen. But what is interesting is that month-on-month inflation would actually decline. Q3 coincides with the harvest season, which usually leads to higher agricultural output. As a result of higher agricultural output, we've seen key commodity prices decline. For example, tomatoes, beans, yam have actually declined. So consumers that's very good news for consumers. The other point, this is 10-year anniversary of the collapse of Lehman Brothers, which sparked a chain reaction of events, which ultimately led to the global recession in 2008.
Right.
I remember in 2008, there was a lot of turmoil after Lehman Brothers, AIG crashed, Bears and Stearns, and it sent a contagion to Europe, Africa, Asia, and it was really bad time. I think the overarching question is have we learned any lessons from that? We saw the regulators inject liquidity through unconventional monetary methods, quantitative easing, taking interest rates down to ultra low levels. Now those interest rates are beginning to increase. Regulators are beginning to take back liquidity. I think the question is, have we learned any lessons? I think there's content of a debt bubble brewing again. Africans, there was this news story of Zambia. The Chinese took over Zambia's ports because he couldn't meet his debt obligation. I think there's this growing debt level, especially in China, in America, in Africa too. So I think that has to be taken note of.
A lot of lessons to learn from history, actually.
Yes.
Let's look at the possible impact of the oil price now on our currency, because again, it's gravitating towards $80 per barrel. One will literally expect that this is a mainstay for foreign exchange. It is also what is the economic driver for us in Nigeria. Then that should also help, with some effects on our exchange rates. What sort of impact do you foresee at FDC?
Yes, the positive impact of this higher oil price is that it should moderate this consistent drip in our external reserves. We have seen the external reserves drip from almost 48 billion now to 45 billion. That's $3 billion. I'm sure if oil prices were much lower, external reserves would be indeed much lower. So what this does is that it moderates this proceeds from higher oil prices is moderating the loss, the drip in our external reserves. And of course, with external reserves, the CBN is able to continuously defend the Naira. Over the past month or so, the CBN has been consistently injecting money into the forex market to taper any concerns or any speculative attacks. I'm sure with external reserves declining, that would typically induce fears, induce panic that, reserves are going down, let me buy forex in case anything. But CBN is injecting and has tapered those concerns. So we're at a very good level. This high oil prices, because of this high
the Naira fell further yesterday to 359, 360.
Yes, it was
That's
flat.
Parallel market.
It was flat at 360 Naira, $360 per barrel. And that's despite external reserves dropping. So I think the CBN is doing everything it can to make sure there are no currency pressures.
So should we then say that oil price at $80 per barrel, even if it goes higher than that, it should be able to kind of weather the storm for us, given the level of political tension that we're seeing at the moment?
Yes, indeed. That is one saving grace. If we take out the politics aside, we find out that our fundamentals, our leading economic indicators are doing well. So there's no reason to be overly concerned. Our indicators, oil prices are $80 per barrel, $31 more than a benchmark price. Inflation is only likely to increase marginally. Our Naira is very stable. External reserves, although it's dripping, it's still at a very comfortable level. So overall, we're at a very comfortable level. And the outlook for oil prices is moving more positive. It's likely to cross $85 per barrel before the end of the year on the back of this Iran sanctions.
You talked about concerns of the sanctions of U.S. on Iran. What are these concerns specifically?
Well, number one, Iran is, I think, the third largest producer in OPEC. And what is more interesting about these sanctions is that President Trump has said that he wants to take Iran's exports down to zero completely. That is even more harsher than Obama-era sanctions, which only took about 1 million barrels per day.
Is that really feasible?
It's not impossible. That is not impossible. The fact that he said he wants to take Iran, that means he's really serious about dealing with Iran. So that is why investors are really concerned about that, yes.
Okay, so let's look at the power sector. You got us now firmly below 4,000 megawatts since August. You've added 138 megawatts. What's fresh in there for us?
Yes, all production, all output, on-grid output has been below 4,000 megawatts, and that is despite improved water levels in the dams. That is unusual for this time. We've seen consistent collapses in the grid. We've seen 11 occasions of systems collapses this year. That means something is really going on. And what that does is that it increases the demand for alternative sources of power. That is why diesel, the retail price of diesel is still strikingly high at 235 naira per liter. So that is really a cause for concern. But overall, I think coming back from where we were in July or in August, our output has increased. It's now at 3,439 megawatts per hour. So that is why actually a month-to-month inflation would decline, because power outputs are actually increased compared to July. Power output improved in August compared to July. So that is why our inflation will also, month-to-month inflation will moderate in August.
Why is this diesel really high at that amount?
Yes, it's because, number one, the international price of oil is $80 per barrel. So markets as well would have to reflect the high oil price with their diesel price. And number two, there's high demand for alternative sources of power. Power stable has been very unstable for the past 3 months. So manufacturers have to resort to alternative sources of power. So that is why the price of diesel, and manufacturers like bread manufacturers, they can't afford to disrupt their supply chain. So they have to 24/7 run their manufacturing belts on diesel generators and other sources of power. So that is why the price of diesel is still very high at this point.
Okay, so you talked about alternative sources of power. We've got a whole lot of that in our energy mix. What are we doing at the moment concerning that? I know Dangote Cement, for example, talked about delving into coal as an alternative source of power. What for you is the latest in that sector?
Yes, we've seen in the past few years, we've seen people actually going into solar. I think that is very positive. It is renewable source of energy, and also seeing people going into biomass, which is in essence is a very valuable tool for mass electrification, especially for the local areas. So that is very positive news. And the world is shifting away from fossil fuels to renewable sources of power. All will, sooner than we know, will soon become an extinct commodity. So it's good that we are moving away from oil and going into renewable sources of power, like solar, wind, biomass, and so on and so forth.
Okay, so finally, and on a general note, what's the outlook for the oil price going forward, and as it relates to the power sector?
Well, I think I don't want to put myself on the line, but I believe that by the end of the year, would close the year at more than $85 per barrel. I think it is going to be a very good year for Nigeria in that respect. I think oil prices, there's significant upside for oil in respect that those prospective U.S. sanctions on Iran's oil production.
So if we don't see anything significantly positive from Iran, anything significantly positive from Venezuela, that doesn't even seem to be part of the picture at the moment. We should be where we are now and continue on that trajectory.
Yes, indeed.
Thank you for your analysis. Thank you so much for your insights. Adim Okwesa, analyst with Financial Derivatives Company. After the break, we'll come back to you with more discussion, analysis on Nigeria's industrialization policy. We'll be back in a minute.